Good morning, everyone. You're most welcome to today's episode of the Market Snapshot. Uh, my name is Norbert Kiza, and I'm happy to be with you guys today, the 8th of April, 2024. So let's begin. We have just a few things we are going to go through today. Uh, Awesome. So a few things we're going to go through today. First of all, to go through some of the comments we got from the Fed speakers that we had, and then also to review essentially how the markets are looking like, to get just a bit of general perspective on how the markets are looking like for today. So yesterday we had some comments from the Fed speakers. Uh, the main comments we got were from Kashkari, and of course, Kashkari's comments were essentially hawkish. And the comments that we got from Kashkari, ideally, some of them include a rate cut this year is still a possibility. So, of course, then again, really indicating to us that it's not yet really likely that they will see a rate cut, but they are giving us signs that maybe the rate cut will be there. And of course, we're also seeing here if we need to hold rates for an extended period or raise rates, we will do that. So some of these comments again affected the currency pairs like GBP/USD, Euro/USD, but also added a bit of weakness for gold. Yesterday, you guys must observe that gold actually had a few challenges moving to the upside. Price action seemed a little weak, and it was indicating to us that we are most likely going to see some bit of stalling with upside momentum. So it could be on the back of some of the comments that we have been getting from Kashkari. Then, of course, the commentary on inflation came back from some of the comments we got, where we saw him saying that it's too soon to declare that we are stalled out on inflation. If you guys remember some of the reasons why the Federal Reserve had kept rates as they were was simply because inflation had remained a bit sticky, and we are seeing inflation failing to actually move to the downside. So we are seeing some of that commentary coming back, but by far and large, the risk on is still fairly there. We just have to observe and see how the price action evolves over the course of the day, and of course into the rest of the week. Now, going over to trading economics, just to see a general snapshot of how the prices are looking like. If you look at gold, this is what gold is looking like at the moment. Gold is actually stalling a bit. It's a bit in the red so far for the Euro session. Silver is also stalling a bit. It's down about 0.5%. And generally, all the commodities are looking a bit bearish for today. So we need to observe to see technically whether we have any setups for potential sales for these commodities. Now, question over to the Forex. Yesterday, of course, we drew a descending triangle on the Euro USD. If you guys recall, on the H1 time frame, Euro USD was actually unable to hold that price action, and it has now skidded lower from there. We're also seeing that AUD USD, GBP USD are all pulling back on that high DXY. So as you can see, all the dollar pairs are currently in the green, and it's likely that we should see more strength there as we go into the course of the day. Now, the indices, I just need to mention something for the indices. Typically, seasonality tells us that most times the month of May tends to take, based on the historical patterns, the month of May is typically bearish month for the stocks and for the stock indices, and that essentially means that we should then see some weakness for these stock indices as we go into the course of the month. But you need to observe for generally price action this week to see generally how the price action is for this particular week. Now, looking at the stocks, especially the US stocks, yesterday they closed fairly green. The earnings season so far is looking very bullish for a lot of the stocks. Some of them have had very, very strong earnings and very good guidance. That, of course, is supporting a nice move higher for a lot of the indices, most especially the NASDAQ. Now, of course, for those who trade crypto, don't forget crypto is available on the FX Pesa platform. You can trade it on FX Pesa platform, and of course, a lot of them are also showing signs of a bit of weakness. Knowing that we are in the month of May, we should see that continue. Now, crossing over to the economic calendar for today, we don't really have that much of data. Today is Wednesday. The data that we are having again on the calendar this week is not looking very. The data that we're having again may not affect the markets as much. Maybe for those of you that are trading, if you're trading WTI oil or Brent, then you might expect to see some potential moves higher on declining inventories. We have the inventories that are coming out at 5:30 today, so you might want to focus on that to see essentially how that can affect the market. Now, this is essentially it on the side of the economic calendar. We might not expect to see that much of a reaction on the data side. So going back to financial juice, just observe and see if there's anything else we missed out. So you can always check financial juice to get your comments, to really get commentary from the Fed speakers. It's a very good site, and you can check it out there. Yesterday we had some people that were asking for analysis on GPP JPY and USD JPY. So I'm going to be handling that. That's what I'll start with when we cross over to the MT5. Okay, so time to look at the charts, guys. Let's cross over to the MT5 and see what's happening over on the charts. So we are going to start with GPP JPY. So GPP JPY is typically showing us this. Okay. Okay, so typically for GPP-JPY, I just want to indicate important things here for most of you that might not be aware, but we actually have what we'd call interventions. So we have interventions taking place. We've had about 3 interventions so far in, and of course, Bank of Japan has actually indicated that these interventions have essentially taken place. So they have not really come out really clearly and to tell us that, we intervened, and that's what a stealth intervention is. So a stealth intervention is essentially where you have a central bank, or you have the government coming in and intervening in the currency market, and they do that to stabilize any kind of fast-paced decline in the value of the currency. So if you recall, on the 26th of April, we actually had a very sharp sell on GPP-JPY that took us all the way from here down up to here. That was a move of about 700 pips. Typically, such moves tend to be moves where you have a kind of stealth intervention. Okay. Now, one thing that's important for you guys to know if you're trading JPY pairs is that every single time an intervention occurs, it doesn't mean that the currency is going to continue selling. Okay. And of course, usually when you have an intervention, the immediate reaction on the market is that there will always be a sharp move higher. And that's what we have seen. So the first intervention we had, we saw that GPP-JPY actually had a very sharp sell that took it back here. And then it got into a steady move back higher after that intervention occurred. Now the same cycle was repeated up until this point where I reached down here. Okay, I reached down here. Now, we are now about, this is about 300 pips from the last bottom point of the last intervention that occurred. So what I'm expecting, first of all, what is currently happening also is a carry trade. Carry trade is where you have investors or traders putting their focus on the currency with the higher interest rates regime. So in this case of the two countries, Great Britain is the one with the higher interest rate regime. So which means investors are putting more of their money in the pounds as compared to the yen. And that is where we are seeing that actually the yen is going under a lot of weakness. So how I would trade GPP/JPY is that, first of all, it's clear that there are signs of upside momentum. However, it's important for you guys as you trade it to have very, very tight stops. Okay. So what I would do is that I would be looking for buys on GPP/JPY without a doubt. Okay. But I would ensure that as I'm trading it, my stops are fairly tight so that in case we get an intervention and we have a big candle like this, you don't end up losing your account. So ideally have tight stops, but start looking for buys because this is a very, very strong uptrend and it's likely that you're going to see it continue and see this price potentially moving back higher. Now, it's very, very unlikely again that we are going to get a stealth intervention, but in case it occurs, you don't want to be on the wrong side of it. So just make sure that your stops are fairly tight. But if you're trading GPP/JPY, I think there are signs of upside momentum there, and you should be looking for buys on this particular currency pair. Now, crossing over to USD/JPY, of the two currency pairs, I would actually look for buys on USD/JPY as compared to GPP/JPY. Reason being is that the DXY is currently showing signs of strong upside momentum, and it's likely that this strong upside momentum is likely to continue as we see price potentially continuing higher. Okay, so I think we should expect to see a much, much higher move here, and we should expect to see price continuing to move higher, possibly touching the levels around this fib level of 38.2. At the moment, this fib level is actually on my H4 time frame, and at the moment we're actually about 50. We're above the 50% point, indicating to us that we are now in some kind of premium zone. However, the price action is also showing us that we have a lot of bullish candles, indicating that we should see USD/JPY continuing higher, possibly touching these levels of 156 and even higher. So ideally, what I would do here is that I would go in for buys for USD/JPY, potential buys, but keep in mind, however, that a stealth intervention can occur anytime. And if you guys are seeing these candles, you've noticed that every single time the candles appear, you have a pullback of as much as 700 pips. So don't get caught up in that move, guys, and make sure that as you're trading it, you're looking for a potential move higher. Now, crossing over to gold, this is what gold is looking like at the moment. So gold, yesterday, we expected a move higher. So it gave us a little bit of a move. Gold is looking very, very choppy. Okay, gold is looking very, very choppy. It has not yet indicated to us how we can expect price to move. So we have to keep observing gold to see how it reacts, especially along these levels of this demand zone. So this demand zone is a zone from last month. If you check gold on your H1 time frame, you notice that every single time we've been getting around these levels of 2,300, gold has been buying back. Okay, it bought back from here. It also bought back from here, and we also saw gold actually buying back as well, also from here, and as well also from here. So now what I'm expecting for gold is that we need to see how it does, especially along these levels of 2,300. If gold breaks through the bottom point of my asymmetrical triangle, which is a bit like this, that was from yesterday. Okay, if we see price action possibly moving in a nature like this, where you have something like this. So if gold breaks below, okay, would want to see how it reacts in this demand zone. If we take out 2,300 and maintain bearish price action, then I would look for potential sells, and I would hold those sells up to my 100% fib level, which is somewhere around 2,262. Okay, so keep in mind, guys, if I extend my fib levels from the peak for gold, this is what we are looking like. Okay, so at the moment on my H1 time frame, gold is actually trading below the 50% level. So gold is actually trading in the discount zone at the moment. Okay, it's trading in the discount zone. For us to see any bearish bullish momentum for gold, we have to take out 2,350. But there are no signs of bullish momentum for gold. It looks like it's ranging. It doesn't look like it looks like it's starting to bow out with its bullish momentum. So we should see that continue. And if it fails to hold above 50% of the fib, okay, I can just add my fib levels in bold, okay, so that you can see them clearly there, okay. The 0% fib was the peak, okay. If we failed, if we fail to hold a golden ratio of 2,322, but most importantly, if we failed to break above the 50% fib level of my box, then this is going to indicate that we should potentially see some bearish signs, and we should see gold uh, potentially selling and going back down to 2,281. So that's what I think for gold, guys. And we just have to keep observing it to see how the price action continues there. Now, crossing over to GBP/USD, GBP/USD has entered into, it has, first of all, it has broken below our golden ratio of 61.8. And yesterday we said that if we fail to hold the 61.8% fib level, that would then give us signs that we need to be looking for buys rather for sells for GBP/USD. So if you listened to me yesterday and used my guidance, you should actually be in a sell right now. And this sale should ideally take you, this sale is ideally going to take us back to this other fib level of 100%, which is somewhere around here, okay? So at the moment, I'm looking for bearish signs on GBP/USD, and those bearish signs, I think, are presenting themselves even more and more. If I move to a much smaller time frame, I think it gets clear that we are now in some kind of a descending trend for GBP/USD. After peaking, we are now in a descending trend for GBP/USD after peaking at that 50% fib level that was from NFP. Okay, so if there's anything to go by, I think it is the strength for the DXY. Okay, the strength for the DXY is looking relatively bullish, and I think that is also one of the reasons why we are seeing this nice pullback from these peaks of 6th of May. And we are now seeing that we are now down actually about 140 pips on GBP/USD. So going back to our H4 time frame, we just need to observe, guys, how will GBP/USD continue to trend. Okay, we are now below our golden ratio. We stayed below our 50% level. We didn't actually enter the premium zone for GBP/USD, again indicating to us that there is still signs of bearish momentum. So if we break out of this box, which is actually the range for GBP/USD since November, then we should potentially see price continuing to reverse lower, and we should be looking for sales for this particular asset. Now, crossing over to Euro USD. So Euro USD yesterday, if you recall, I drew a descending triangle on it, which typically tends to look a bit like this. Let me just show it to you here. So it looks a bit like this, okay? This is the descending triangle on GBP/USD, and rather on Euro USD. So a descending triangle is typically a setup for a sell, okay? Whenever the price action fails to break above the upper trend line, you should be looking for sells, okay? So you notice yesterday we had a lower low around here, okay? So there was a higher high, or the highest high, and then after that we then saw price getting lower and lower. Okay, so this is a simple way of trading, guys, and it usually helps you to get very nice setups. Okay, so you can notice that this is what we had with Euro USD. So we had the highest high, lower high, and of course then lower high. Okay, so these are signs of bearish momentum. So you can see after having this, we actually broke below this level, and I told you yesterday that if we do not hold price action above this level, okay, then we shall look for sales. Okay, so you can see we are now trading about about 20 pips. Okay, 20 pips. The 552 minus 384 should give you about 20 pips. So we're now trading about 20 pips below this level here, indicating to us that there are signs for there are some signs of bearish momentum. So we should see this kick in, and we should potentially see Euro USD continuing in this descending channel. If we break below the 61.8% fib level, then it's going to open up the doors for GBPUS, for Euro USD to trade even lower. Now, guys, keep monitoring the DXY, because the DXY is going to give us indications of how we can expect the day to progress. So, question time, guys. If you have any questions, now might be the time for you guys to send in your questions. Send in whatever question you have, guys. If it's regarding a particular chart or regarding any asset, I'll be happy to take your questions. Okay. So Apollo, you're saying risk sentiment stalls as DXY surges on hawkish Fedspeak. How true is this statement, seeing how dovish Jerome Powell was? Yes, Jerome Powell was dovish. However, this statement is based on the recent comments from the other governors. Yesterday, we had Fed Speaker Kashkari, and Kashkari's comments ideally indicated to us that there are still signs that the Federal Reserve might still hold back on rate cuts. And of course, yes, Powell, I would say was fairly dovish. Fairly dovish. I wouldn't say was fully blown dovish. Was fairly dovish. However, the fact that we are still not certain of how the data is going to come out over the next few months. Of course, if you look at the probabilities for the target range of the federal funds rate, you also notice that the earliest that the markets are expecting a rate cut is going to be around September. Okay, so what that means is then that you can expect to see a fairly strong DXY. And of course, I'm thinking DXY's upside cycle has not ended yet. It's likely to continue, possibly until the first rate cut comes. So when you get the first rate cut, that's when you're going to see the Federal Reserve, that's when you're going to see the DXY starting to sell. And it would then mean that we will then start to see some potential moves higher, especially for currency pairs like GBP/USD and Euro USD. Awesome. So I hope that helps Apollo with your question. Any other questions, guys? If you have any questions, guys, feel free to send them in. Questions. Apollo, you're saying order book as above. Yeah. What another book, of course, is typically what it means is that it essentially shows the bids and the asks in the market for a particular period of time. Okay, that's what an order book is. Yeah. So, of course, for certain things, for instance, like the ones that you trade, like CFDs, you essentially don't have access to an order book. Okay, the best you can get, I think, on your MT5 is maybe depth of the market. Okay, you can get the depth of the market. But if you're trading on an exchange, that's usually where you find the order book. And the order book is essentially supposed to show you the order flow. Uh, it shows you how many bids are there, how many asks are there, the depth of the market. So it's typically a sentimental tool, and you typically use order books on exchanges. Okay, so you might not be able to find an accurate one for the assets that you trade, especially if you're trading something like if you're trading maybe CFDs. Very unlikely that you can get a reliable order book for that. So only if you're using exchanges, but that, I mean, the term order book is just something that shows you bids and asks uh, at a particular time in a market, and it's supposed to show you the depth of the market. Who is in charge on the price action? Are we having more sells? Are we having more buys? Okay, so that's the purpose of the order book. Awesome. So I hope that helps, Apollo. Yeah. If we don't have any questions, then let's call it a day, guys. We'll catch up on Friday for Friday's session. Tomorrow, you guys are going to be with Rufus. So I wish you guys all the best. Cheers, guys, and happy trading.